More than 20,000 taxpayers were targeted in what's considered the largest ever phone scam with the Internal Revenue Service that they've ever experienced. My guest, Rafael Tolino, spokesman for the IRS in San Diego, is here with more on how to protect yourself from tax scams, changes to this year's tax law, and deduction tips. Rafael, welcome back.
Thanks for having me.
Now, we've heard this scam has targeted thousands of people across the United States. How can taxpayers protect themselves against this particular scam?
Yeah, it's widespread, and it's basically a phone call, allegedly from the IRS, and it's not. And the scammer wants you to pay taxes owed on a prepaid debit card and or a wire transfer, mostly the debit card, but under no circumstances the IRS is going to make that phone call to you. So protection is basically hang up the phone, don't comply, because it's not the IRS calling, it's a scammer looking to separate your money from you. And they get threatening and insulting and demanding, and it sounds pretty believable using the IRS as a lure, but certainly
the IRS is never going to call you and demand a payment on a debit card, correct?
No, never.
Okay. So
first contact with the IRS is a letter in the mail.
Right.
You ignore the agency, letter in the mail. So you get the idea. We're contacting you that way.
Okay. Tax laws change every year. What are some of the biggest changes this year?
We didn't see too much legislation that came along like last year and in previous years. We had a change for same-sex couples. So if you're married in a state that recognizes a same-sex marriage, at the end of 2013, you're going to have to file a joint return or a separate return. Married return is what I'm saying. There's two options there. We had a simplified home office deduction. The big change, I suppose, we saw is a lot of deductions and credits that expired at the end of 2013. So going into 14, I suppose, looking at it that way, as you do planning, you're not going to see a lot of those that were there for 13 unless Congress brings them back. And if that happens, they have done so in the past retroactively to the whole year. Oh. So that might be something that'll happen.
But if they don't, let's talk on some of those deductions that did expire. What are, give us the 4 or 5
a big one, which we saw a lot of questions, or I did in previous last year, is the Mortgage Forgiveness Debt Relief Act. And that is basically exclusion from taxation from cancellation of debt from a short sale or foreclosure. That was expired at the end of 2013. Some energy credits expired. You saw the sales tax deduction expired. Tuition and fees expired. Out-of-pocket expenses for teachers, those last two in the education arena, those are deductions that expired. So just to keep in mind as you plan for 14, a lot of those aren't in play or in the law. So we'll see how it goes for going forward.
Are there any penalties for the Affordable Care Act this tax season?
For most taxpayers, the vast majority of them, you really see no effect on your 2013 return for health insurance purchased in the marketplace as it relates to the new law that is being filed this year because you're filing for 13. Going forward, when we file next year for 2014, depending on things, you may have some information to put on your tax return, yes.
Remind us again about the extension process for those people who can't make the April 15th.
Oh yeah, easy. 2 ways. There's a simple form you can mail in. You can do it through your software. Gives you 6 months through October 15th. But the key with the extension, it's an extension of time to file and not necessarily to pay. So if you owe or you think you owe, that deadline is still April 15th. But what happens? Well, penalties and interest can accrue on the balance due that you have. So you want to file. By all means file, even if you can't full pay. Pay something, pay what you can, let the agency know, and from there let's work it out in terms of a payment plan, for example, to pay over time. But certainly don't ignore it and not file because you can't full pay on the account. Do make that filing because the penalty is much greater for not filing with a balance due as opposed to not paying. So just keep that in mind.
What if you're unemployed or really don't have the money to pay right now?
So file a return and then work something out. Let the agency know.
Okay, so
and
it's
that's
the
same thing as I just mentioned. Yeah,
okay.
Unemployment generally is taxable on the federal side. If you didn't have money withheld from that, then you're going to want to include that in your return. But do take advantage of anything there based on your situation, deductions and credits to lower your bill, legally of course, and legitimately, and or increase your refund, sure.
Yeah, and I have to ask you, your number one tax tip this year?
Number one tax tip, at this point, get to a computer and e-file. Make it easy and convenient. 90%, more than 90% as of mid-March are being done through the computer. It really makes it easy.
All right, well, we have a lot more tax tips and links on our website, kpbs.org. Rafael Tolino with the IRS, thank you so much.
Of course, thanks for having me.